Hey guys, how's it going? Ronnie N here. Thank you for joining me on another video. I know I haven't been posting in a while, but unfortunately I've been kind of hectic and I haven't been able to settle into a routine where I am able to record videos like I used to, of my thoughts, my feelings, my process, and what I actually discovered as I go through this journey of being debt free. And today is one of those special days where I want to drop one where I am talking about what I have actually experienced and what I've actually discovered on how banks keep on making you pay more and more, and they want to keep you paying for as long as they possibly can. Because at the end of the day, loans are the bank's core business, and it's how they actually make money from people. And this video, hopefully by the end of this video, you'll realize why it is absolutely imperative that you do not pay just the minimum amount for you to get out of this trap, to get out of this cycle which the banks put you once you get a loan. So I actually discovered this before even I started this journey. What I actually noticed was a colleague whom I was working with had been paying a loan, and they didn't go through the whole process of paying off. They didn't go through the process of applying for a bank holiday. You know, they were actually paying off their loan, and they didn't apply for any pauses. They didn't stop for once. They were paying the loans throughout, but it only looked like she had only paid $1,000 from her overall loan in that space from March until November, because that's when I started paying off my thing. So that's when I noticed it. So from March and November, it only seemed like she had only paid off $1,000 from her loan. So we looked at the statement and we were looking at like, okay, what is this? What is that? And she went to the bank and asked the bank, hey guys, what is this? And obviously, I understand this, because that's what they do. But I noticed it, and I went to my own statement once I started paying off the bank to figure out, to see what is actually going on here. And that's where I saw the cycle, that's when I saw this trap. So what I will do now is I'll move over to my computer and I'll try and explain in a formula, and just to show you how they keep you in this trap of making you pay more and more, and for as long as they can possibly keep making you pay for, and how they manage to do that. And then I'm gonna go over to my actual bank statements and show you these things that I'm talking about, and show you how I am countering that by not paying the minimum loan installment. And luckily for me, not paying the minimum installment was part of the plan, so that I can go and finish my goal of being debt free in less than 18 months or 18 months or so, which I am actually making great headway with. So without any waste of time, let's move over to the computer and actually try and follow as precisely and as close as you can on how banks are keeping you in a cycle of paying more and more. Okay guys, welcome. Thank you for joining me then. Okay, let's get straight to it. So basically, this is how the banks keep you trapped in a cycle and loop of paying for longer and longer, because that's where they make their money, and actually what you don't realize is actually going on your bank account. So let's maybe start with the expectation part. You've gone to the bank and you've got yourself your 10,000 loan, and you told yourself, no, I'm going to be paying off $1,000. They give you that payment plan, whatever. But for the sake of argument, I'm going to use round numbers, and we start from the 10,000, right? So month one, on your principal, first maybe I should tell you this. When you go to the bank and you say you're looking for 10,000, they're not going to give you 10,000. They're going to give you probably something like 9.5. But your principal amount will probably be the 10,000 plus some interest to it. Don't ask me why, I do not know myself, but that's just how it goes, and I've seen it a couple of times. So maybe let's go back to the 10,000. So your principal loan is 10,000 and your payment plan is 1,000. So here is why you should not be paying only the minimum repayment plan which you agreed with the bank, right? So your expectations are, on your loan you will see that you've got your 10,000 which you need to pay off, on the first month, and indeed you pay off that debit order which you have with them of $1,000, and you expect your balance to be probably 9,000 something, isn't it? But unfortunately, that's where the bank gets you, because people don't even look at their statements. They don't even know what's happening in their loans. That is not what the banks do. You will have your principal amount, which will be your 10,000, and even before you've started paying, what they actually do, they do it in the days where they know this. You said your agreed date was probably maybe the 25th or 27th, whatever the day which you've set for you to make your payment. What they will do to you during those days, and you never receive any communications on this unless you look at your statements. And once we're done with the practical example, me showing you how the bank track you, I will then open my statement and then show you these things which I am talking about. Alright, so what they will do is they will charge you for something they call a loan service fee. A loan service fee will probably be something, it's usually a standard $50, yeah? And I bank with Standard Bank, and I'm going to assume and go on a limb that the Southern African banks probably do the same, because maybe they follow the same financial regulatory regulations. So they will charge you a loan service fee, and then they will charge you an insurance for your loan. Right, they'll charge you an insurance. It's usually it always seems like a small amount, between 30 rands and 40 rands. So I'm just gonna stick on 32 maybe for this sake of arguments and using round numbers. And then they will then charge interest rate on that loan. Actually, this is where they make their money. I would have been fine, just knowing how they do it, but as far from what I understand by looking at the loans, because it's never the same amount every time, I think the interest rate is based on the balance of the loan, right? And I'm sure they've got a way of calculating it. And the most ridiculous interest rate which I've been charged before was like over $1,000. I was also surprised myself, but you know what? This is how they roll, this is how they trap you, and this is how they keep you in the loop. So usually the interest rate now that I'm seeing, it's between 400 and 600. It's always fluctuation between, but for the sake of this argument, we're gonna put it down maybe as 500, right? And then even before you've started paying off your balance, this is how much you need to start paying off. This is the actual money that you need to start paying off. And then you make your payment plan, because when you have agreed with you're gonna pay $1,000 and you don't know what's happening inside the account there. You're not even bothered to check. And this is actually, and you find you've only paid off maybe 200 rands from your actual 1,000 that you're paying off. So, and then the balance becomes this less that, and you find yourself that you've then the balance becomes 9.5 instead of like 9,000 as you would have expected it. So this is the cycle, this is the loop, and then it keeps on carrying from there on and on and on and on. And if you're not paying additional amounts to counter this, then you are trapped in the cycle where it's like your balance, it's always fluctuating. It's seemingly like it's not going down. It's not going down as how your payment plan of $1,000 is supposed to be. And if you can look at it, how much have you actually paid from this? Equal $1,000 less 582. You've actually paid like $418. You've actually only paid $418 towards your principal loan of 10,000, and then the cycle continues, and then this becomes the month one balance, right? The month balance is 9,800 9,582 instead of 9,000 straight. And the cycle keeps on happening again the next month, right? The cycle keeps on happening again the next month. Now the balance becomes the balance now becomes 10,116. So on the second month, you're still stuck on 10,000, and again you have to pay your principal. Let me just so again you make your payment plan, which is $1,000, isn't it? Of course, the balance becomes this less this less this. Still, you're still on the 9,000 pounds on the second month, whereas you would have expected that on the second month it would have been, let's go, payment 2 would be $1,000. Therefore, month 2 balance would have been this less that. That's what you would have expected, because you are just paying the minimum amount and you're not bothering to check what's actually happening in your bank account. I hope you're following what I'm trying to explain to you on how the banks are trapping you. Same thing goes on this becomes the second month balance. At this rate, do you see where this is going and how long it will take you to finish paying off your debt? Again, the same thing, the same cycle starts happening for the third month. On and on and on and on, because you are paying your principal, you're paying your minimum repayment plan of $1,000, and on and on and on and on it goes. Yeah, same thing on the following month. That's what they do again, religiously every month. That's what happens. You've now just only barely scratched the surface. After 3 months, you find you've only paid about, what's this? It's about $300. So this should be equal this less that. After 3 months, you find you've only paid 254. After 3 months, you've only paid towards the loan. It seems like you have only paid 254. I hope you get what I'm trying to say to you. This is how the banks keep you trapped and stuck in a never-ending loop of paying a loan. So how am I paying off my loan? I'll show you, right? So you make your payment plan, and then you pay an additional, whatever that you can afford. This is how I am paying off my bank loan and getting out of this trap as quickly as I can with the goal of 18 months. Yeah, so you pay additional, whatever that you can. Let's say you are able to pay off another $1,000. There you go. You see the difference? You are able to break above that limit which these guys have got going for you. Same thing for here as well. I pay more from this. So what it seems, let's see, after the same 2 months, this is actually 3 months, how it looks from that, from my side of things. So this is what you pay off in the first month, and this becomes the month 1 balance, and this becomes the interest rate. Of course, this is the second month balance, and then this is the third month balance. This is the third month balance. The difference, that's if you are not paying the minimum payment plan. Always pay more than the minimum plan. Let me show you these things in my bank statements, just so you guys don't think I'm just fabricating things. So I'm going to start off maybe in January of this month. This is my statement. This is my statement as of this is my loan statement. Okay, so let's come to my statement. So this is my statement, Standard Bank statement, as of December last year to now end of May. In December it was about 36,000. Now it's at 24,000, because I am not paying the minimum statement. The minimum payment plan. I am paying more than what I'm supposed to be paying to try and finish off this debt as fast as possible. So maybe we can start off here in January. So there it is, right? They had actually taken more than what they were meant to take, so they had to pay me back my $4,000, but that's neither here nor there. So the balance was 37,000 something, and then I paid off, of course, my loan recovery, which is like $1,000, and I added something on top of that, so I added like 500 and something for that to happen. And then here are the charges that they start adding up. They add the LT. This is the LTI premium, is the insurance that I'm talking about, that they add to your balance. And then there's what they call a loan charge, which they add to your balance as well, and that takes it up a bit. January came around, and of course I paid 2.4 towards my loan. So as you can realize, so this is Standard Bank. So what Standard Bank does is they take your loan, and then you see your balance, like, I know I've paid my month, and then after that, that's when they start adding this additional cost, so that you find them on the next month. You know what I mean? So there's the insurance, there is the loan service fee. February came around, and I paid 2.4 towards my debt. That's the balance after paying towards my debt. And then this is where they start again with the additional costs, the premium, which they took, and then this is the interest rate, ridiculous interest rate of about $1,139.40, bringing the total balance back to 34. And on top of that, I still had a penalty on the insurance of $87. So these are all additional costs which I am being made to pay. Okay, I put in towards my bank loan. I put in 1.2 towards my bank loan to try and bring this thing down to about 3.3. Again, there with the charges, additional charges, so that you can keep paying extra and extra. The $50 loan fee, the $32 premium, and then an interest rate. What month is this? This is March now. So at the end of February, which ends here, after I paid off my secondary additional extra which I'd put for myself, right? And then after that, then they start with preparing to add more charges for the next month. Then they start with the charges to prepare for the next month. They put in the 50 rands. They put in the 50 rands. They put in the they put in the loan charge. They put in the insurance. They put in the interest rate, and this month's interest rate was close to $500. That's what it was. And then of course my agreed amount was $1,000. There it is, 986 taken. And then they start again with adding the charges for the following month, because they assume, I know you've done paying now, you're not checking your account, and this is what's happening. But there I put in an additional $1,000 towards my loan, because I want to be paying more than the than the actual agreed amount, so that I can finish my debt earlier. So my plan is, after paying off all my my bills and expenses for the month, I put in money towards the loan. So this, for this month, $1,000 was left over, and I put it towards the loan to bring my loan down to about 32,000, and that was in March. And there comes around, that's my cycle for March, it's finished and over. And there comes in the cycle for April, and this is where it starts again. This is where it starts again. This is where it starts again. Okay, so I'm gonna start from here, and then they add the $50, which they call the loan service fee, and then they add the insurance. At this to this day it was 31. Of course they took that immediately, as in by took that I mean I had to pay for it. And then interest rate. In April I had to pay a 528 interest rate, gets calculated in the balance, and on top of that I had a 5 cent what do you call this thing, penalty on the insurance rate, I might add. And then of course the agreed payment plan every month of 986.41, which you see here. But because I am paying more, I paid 1,500 in April, and I also added an additional 3,000 in the beginning of May towards my loan, which took it down to about 27,000. So I hope you see what I'm trying to say to you. So if you keep on paying your loan on the small amounts, by small amounts being the agreed payment plan, you will be stuck in the loop, and you'll keep paying for a very long time without seeing any progress towards your loan. So maybe let's have a look now in May, starting from after it finished in April. So this is, I'll consider this my last payment from April, which is my additional payment of 3,000 towards my loan, which I'd made on the site. And then this is May, right, the month we just left now. So of course they start with the additional cost, which you don't see because you're not having a look at your statements. All you know is that every month I just pay 1,000 rand, and that's it towards the loan. So they put the 50 rands, the premium, which jumped from 30 to about 54, and then the interest rate of 454. Mostly it's the interest rate which takes it up. For example, if I were paying only the interest rate, let's see, if I were paying only the interest rate, right, if only I were paying the bank loan, this is how much I would be paying towards my loan. So they are charging what's this, 54.59. they are charging $50. They are charging 454.02 towards the loan, which means what's happening now? Which means this is the sum. Which means that, and I am paying $1,000 every month. It means that actually every month I am equals this less that. It will actually mean that I'm only actually paying $441 towards the loan in reality, if I were not making my own payment plan of adding on top every month when I pay. So I hope this puts in clarity to how the bank keeps you trapped in paying for your loan for a very long time if you just keep on paying your minimum balance. Thank you for joining me. Sorry to make this video long, but I just wanted to drive this point home, and hopefully people are motivated to actually work towards being debt free and pay their loans. And as always, I am not a financial advisor. I am just a guy going through the process of going debt free, and I'm making great progress. I'm gonna make the next video to show you how far I've come along in the process. Thank you for joining me. See you on the next one.